All right, topic A tonight. Stocks down for the week, but up significantly 2 days in a row. Today, banks led the parade as the Fed okayed dividend increases and investors are snapping up bank stocks. Despite potential U.S. and UN military intervention in Libya, oil basically flat for the week. Another factor today, the G7 intervention did lower the yen, but the greenback lost ground against all other currencies. We are now at or near 10-year lows on the dollar index. So let's get at it with our market guys. We have CNBC contributor Don Luskin of Trend Macro, Lee Munson, Portfolio Advisors, and Larry Glazer from Mayflower Advisors. Lee Munson, good day in stocks. Let me start with the bank story. The dividend increases, by some reports, almost $9 billion. Does that story have legs?
It does, and I think it restores confidence. Now, I wouldn't exactly say that investors should go out and try to pick the highest dividend-yielding stock. I personally think Goldman Sachs is great, and they paid off their old man today to the tune of a few billion. But I do think this is going to restore the confidence. It tells people one thing. All this money we're printing in Washington is going straight into the bank's coffers, and if you're a shareholder, you get a little bit of a tax refund before April 15th. I think people should take it seriously.
All right, Larry Glazer, same question to you. With this add-on, can banks next week continue to lead the stock market higher?
Sure. Well, Larry, certainly this week we saw volatility back with a vengeance, and the breath of fresh air and all of this noise and all this fear that came back to the market was the equity income story. And that increasing in dividends that we see from banks is really refreshing to retirees. Even though we have been cautious, we've been advocating to investors on this show, it's dividends, dividends, dividends. Equity income, the story is alive and well, not just with banks, Larry, even Cisco, a very different animal, paying a dividend. So dividends will drive this market even for defensive, cautious investors.
All right, I'll stay there, Don Luskin. Our dividend's going to drive the market higher, mostly banks. We got Cisco on the table. And my add-on question, will the stock market continue to have upward legs next week?
Look, here in rainy Silicon Valley, I personally think it is a tragedy that Cisco is paying a dividend. That means that one of the most innovative companies in America can't think of anything better to do with its cash than return it. Oh, my God, please, whatever happened to innovation? You know, with the banks, it's a different story. No one expects innovation from banks. No one even really expects solvency. So the fact that the Fed has taken a look at their balance sheets and decided that some of them can pay dividends, I guess that's a boost to confidence. That's a good thing. But come on, let's have growth, not just paying back money to people.
But Don, growth, that's not what this is about. I mean, it's not about the expansion of PEs or expansion of earnings right now. Your reason is treason. There's no reason why this market should be doing anything other than responding to a low-risk premium versus bonds and stocks. And the fact that over the last 10 years, stocks have been hammered and bonds have just recently reached their zenith. I think investors should look at their confidence level, how they feel about it. If Cisco really needs to put a dividend to make people feel better about it, then let it happen. We need everything we can to boost investor sentiment. I think the actual fundamentals are not quite as wonderful as you might make it out, even though I'm with you and I'm bullish.
Don, you have a riposte to that riposte?
I'm trying to process all of it, Larry. I guess all I'm saying is that what investors really want, if bonds are at their zenith and everybody's got to get out of bonds, if that was overdone, if that's all risk and no return, then why do stocks want to act more like bonds? Why do they want to be more like why do they want to be dividend instruments, income instruments? Stocks are fundamentally growth instruments. They're call options. They're a call on the upside. If Cisco is telling the shareholders that there is no upside anymore, that ain't a good signal. If that restores confidence, well, all that tells you that confidence is so shattered that even a story like that might restore it a little bit. That's not a good message.
All right.
Don, it's dividend blasphemy is what you're telling us. It's dividend blasphemy. A third to a half of the total return of the market is dividends historically. This is a good thing for individual investors.
Wait a second. Treason, blasphemy, these words. What are you saying?
It's
dopery?
Man, this is March Madness this evening. Thank you, gentlemen. I appreciate it. Larry Glazer, let me stay with you.
Sure.
We had some bad inflation reports this week.
Absolutely.
And today, it's very important, today after the G7 intervention, yes, fortunately, the dollar went up against the yen. But here's my question. With the dollar at almost a 10-year low on the index, does that trouble you, and should that trouble stocks?
You know, it's interesting, Larry, when we talk about the impact of currencies, you know, it's one of those issues that we tell investors. There's two types of investors, those that can't predict currency and those that don't know they can't predict currency. And for us, it's important to have a level of diversification in currency exposure. But I think the mistake investors make is, while we're on the blasphemy subject, it's a dogmatic belief that weak currency is good for the U.S. market. It may be good in the short run, but I don't like this idea. It's not a feel-good topic that the only way we get out of this is a weak currency. In the near term, it is good for the developed world when they have a weak currency, and it's good for the market, is what the data suggests, and it's bad for the emerging markets. In the long run, I don't like it. It's not how I want to see our markets and our economy perform.
Lee Munson, is there a connection between the dollar at 10-year lows, rising inflation, and the stock market?
Oh, absolutely. I mean, you know, there's a lot of things that I don't like, but I have to make money for clients. Let me give you a perfect example. The fancy bread, the sourdough that I eat at Whole Foods costs $5.99 a loaf, and my car, I like fast ones, it's like super unleaded. The price is going through the roof. So today, you know, I had to sell out of my grain positions and my copper positions because what I'm doing is I'm making homemade dividends. Now we're poking fun, blasphemy, treason, but the bottom line is I'm forced now to try to make homemade dividends or dividends, whatever, so that I can return that capital to my clients so they can buy things like bread and fuel, regardless of whether or not they have a high lifestyle or a middle income lifestyle. I think the dollar is a real problem. I think that we're going to get inflation, but I've got to do pragmatic trades right now. So taking money off the table of some of the currency things to return to my clients and trying to get long some of these banks where there's a psychological, tailwind, I think that's what makes sense to investors as we go into the weekend.
All right, Don Luskin, let me stay with this theme. The dollar did appreciate 2% against the yen, so the G7 intervention in that important sense worked. Now, the Japanese disaster is still on the table. Still many things that are simply not knowable regarding the nuclear problems and the radiation issues. But I did see in your notes that you would be a buyer of Japan. Can you tell us why?
Well, we've been telling clients all week right at the bottom to buy Japan. We've got 10% in that trade already. Look, in 1995, we had the Kobe earthquake. When that happened, Kobe was one of the world's busiest ports. That was a true economic disaster for Japan. And over a period of time, the Japanese stock market lost 25% and recovered it within a year. I think we've gone through that whole thing on internet time. The entire correction in the Japanese market has happened. Please, nobody worry about this radiation jazz. This is crazy panic. You don't need to go buy salt. You don't need to go buy iodine pills. Just forget about it. You're being stampeded. Look, remember, tragedies, wars, in a funny way, as horrible. I don't want there to be any wars. I don't want there to be any terrorist attacks. I don't want there to be earthquakes. And believe me, I'm talking to you from sitting right on top of the San Andreas Fault. So I really don't want that. But when those things happen, they stimulate growth. The terrorist attacks of 9/11 ended a recession in this country. They didn't make one. And that earthquake in Japan last week is going to end their 15-year recession. It's not going to make one. You want to buy that country.
All right, I hear you. But
no, Don, you're being insincere intellectually. Listen, I'm a trader. I'm a pirate. I got to make money for things. I agree with you. I don't think people should overreact, but you have to want to have some level of tragedy in this market to create some volatility. I think you're being insincere saying that you don't want it to happen. If we don't get volatility, how am I supposed to get trades this week if I don't have people freak out? If we don't have, if there's radiation or no radiation, if the government covers it up or not, we need those things. I think that we should be more honest with the public that we're looking for big events
look, this is just ridiculous. This is just absurd. I'm not going to take this. Don't accuse me of insincerity. I'm the one who's telling you there is no radiation panic. I'm the one who's saying don't panic, all right? So where's the insincerity in that? Come on. Give it a rest.
Because I don't think that you actually know, neither do I. I don't think anybody knows what's going on over there. I think that the governments have controlled the information. And listen, Don, I agree with you. I think it's, I'm not taking the shot on Japan because it's not my bag of tea. But, I think that if you want to take a shot at something that's oversold, I think it's fine. But we can't sit here on TV and say that we actually know what kind of radiation is going on there. I don't think that we know. I think that we have to look at the psychology of the market.
It's nothing. It's nothing. If I'm wrong, send me a bill. Right. I guarantee you this is not an issue.
All right. It's an interesting point of view. I don't know that anybody really knows, but it's an interesting point of view. Larry Glazer, let me come in. Japan or America, Larry? Simple question. Investing in Japan or investing in America?
Sure, Larry. And as we've been advocating here on the show over the last month, it's actually, to us, it's the developed world. I mean, we view the emerging markets and we view the developed world. Japan was very cheap prior to the situation. Japan has a history of rebuilding. There are a lot of positive things. They're hidden up by a 20-year bear market in Japan. So I think there are plenty of opportunities for daring investors in Japan. And in this case, I actually support Don's view. However, I wouldn't lose sight of being at home. IFA is a great way for investors to play the developed world, and I think we lump in a lot of those areas together. These are going to be places with a lot of opportunity, a little bit more stability of principle during times of turbulence, and Japan, it all falls in that category.
Lee Munson, I just want to be sure. What is your investment strategy right now? What is your favorite leading investments? Where are you going next week, buddy?
You know, next week we just took possession. It might go over a lot of people's head, but we sold a lot of puts on the NASDAQ, which means that as of right now, I own a lot of the NASDAQ 100, the Qs. I like Goldman Sachs. It's, you know, same idea. I like that they paid off the debt. I like John Deere for the ag story. We recently bought some rig. It's just an energy play. I just don't, you know, listen, anybody who wants to take a shot on Japan, that's fine. I'm not playing the IFA. 20% of the IFA has Japanese exposure. I'm just staying here in the US of A. I'm bunkering down. I'm trying to make money just like the other two guests.
Don Luskin, is there an energy play right now with nuclear power in disfavor for the moment because of the Japanese disaster? Is there an energy play? Is there a coal play? Is there an Exxon play? How do you see that?
I think we're going to look at, a month is going to go by, and the oil price is probably going to come back down because the Japan thing will be behind us, and I'll bet the Middle East stabilizes. But yes, there will still be an energy play. You know why? It's because the great global recession is over. So all the cyclicals are going to work again. The energies are, the industrials are, the financials are. Guys, we're in a bull market. At this exact moment, we are in a correction in a bull market.
If you come in Monday morning and oil is up $20 a barrel, let's say there's a conflict, God forbid, in Nigeria, or let's say there is an issue in Saudi Arabia, up $20 a barrel, does that derail your optimism? Does that have any impact on your investment strategy?
Don?
Well, of course it would. There are always these contingencies, but sitting where I am right now, I'm predicting that's not going to happen. And in fact, the oil market is predicting that's not going to happen, or oil would be at 120 right now.
All right, I got to get out. Get out. We covered a lot of ground, gentlemen. Thank you very much. Don Luskin, Lee Munson, and Larry Glazer. Not a shrinking violet among them.